It's been a volatile stretch for global markets. Oil has been pushing higher, bond yields are rising, and precious metals have been swinging as investors try to make sense of geopolitics and shifting macro signals. Well, at the same time, mining equities are still lagging the move in metals, raising questions about where capital is actually going. Now, Rob McEwen has been through multiple cycles in this industry, building Goldcorp into one of the world's leading gold companies and now leading McEwen Inc. as it advances in a new generation of gold and copper assets. Rob McEwen, you're with us. Thanks very much indeed for joining us.
Thank you, Devin. Wonderful to be here.
Rob, listen, let's start here very quickly. I mean, over the past few days, we've seen oil push higher, bond yields move up, and gold actually pulling back despite the geopolitical tension. What do you think the market is struggling to price in right now?
It appears to be liquidity. It was the market that went down, and I think there's a high degree of margin leverage and people are looking, they have to sell what is performing well, and gold was performing well. And it's very liquid. You can move it, settle in 2 days. And I think that was part of it. There's also just a concern, how widespread is this? And perhaps some of the combatants have a lot of gold and they're liquidating some to fund their efforts.
You know, it's interesting you say that, because in that kind of environment, Rob, how does that change the way you think about allocating capital today?
Well, it emphasizes the fact that the sources of supply have become restricted and there's new demand for a lot of it. I see the world being divided up vertically right now. I mean, China's taking Asia, Russia's trying to take Middle Europe, America's looking at all the Americas, and they're all looking to secure a stable source of supply. And you're also looking at someone, I guess America's looking at it and said, the world runs on oil. And if you control Venezuela, and you control the Panama Canal, and you control the Straits of Hormuz, there may be some opposition or countries that don't agree with you that are suddenly finding themselves without oil. It's a game of trying to get something you want.
Rob, in this time, gold is holding at historically high levels, right? But it has been volatile. We've looked at the behavioral patterns over the past week, 2 weeks or so. Does this feel like consolidation for you, or something a bit more uncertain? How do you see it?
I think it's a great time to be adding to your gold position if you have a position, and if you don't, you should be adding to it now. I think it's only going higher. There's more inflation coming into the system. You can look back a long way in history to see that when currencies are being debased, gold has been one of those areas where it preserves your wealth.
Yeah. Copper is quite interesting. We'll get back to gold in a moment, but you know, you've been focused on copper, right? And we're hearing more about supply constraints. You've touched on that in the past. Do you think the market fully appreciates that particular story yet, Rob?
Copper is fundamental and foundational for a modern society. It's electricity. And there's a lot of projections of a deficit of supply relative to demand. You've seen, a short while ago, EVs were losing their popularity because the price of oil was relatively low. I'd say the companies that were about to write off their EVs inventory will see an uptick in demand for that. And you're still seeing a movement towards electrify transportation. And now you have a lot of rebuilding to take place in the Middle East. You have Asia still growing, and copper is a very key component of that. And also tied into that is the sovereigns looking again for stable supplies, long-term supplies of critical minerals, and copper is one of those critical minerals. So I expect the demand's going to remain strong for a while.
Through all of that, you're advancing the Los Azules in Argentina in this particular environment. Rob, how does this kind of volatility at the moment affect investor appetite for large-scale projects like those?
It throws some cold water on demand because people aren't sure where the economy is going to be going and where those demands are. We happen to have a project that Los Azules, at least according to our feasibility study, would be in the second lowest quartile of the cost curve for the industry. Yeah. So we're somewhat insulated by that. And it's a large project that we're expecting or planning to put it in production in 2030. So it'll be one of the newer projects to come on stream. And we'll be producing a cathode, copper cathode, rather than a concentrate. So it doesn't have to go to a smelter. It can be used directly by industry. And China seems to have captured the refining and smelting market. North America and Europe didn't want refineries or smelters in their backyard. So China picked up the slack and now controls the supply of finished product to a large degree. Our project will be able to supply copper directly, so we circumvent that constraint in supply. So I think we have a project that's financeable, be early market, delivering a product that, as I said, industry can use right away. So it becomes a desirable product and project to put money into.
As you want to take this and meet some of the, your objectives on that, jurisdiction is important. What's your feel about the, jurisdiction and political atmosphere in Argentina? Supportive for what you're kind of doing at the moment?
Absolutely. Since President Milei was elected in December 23, he's introduced policies and legislation that are designed to encourage investment into his country, to reduce inflation. And by policies he's put in there, he's reduced the tax rate from 35 to 25%. He's removed exchange controls, so now you can take money out of the country without the complications before, or having the funds frozen in the country. And 2 weeks ago, I was in New York with some of my associates, and JP Morgan and Bank of America were sponsoring what they called Argentina Week in New York. And President Milei came up with with governors from 11 provinces. And what I found particularly striking about it, one, Jamie Dimon, the head of JP Morgan, just got up and said, look, Argentina has changed. It's going back to a period where it one day might be considered one of the richest places in the world. Or when I grew up, I remember hearing the expression, as rich as an Argentine. And when you look at their copper, their uranium, their oil and gas, all of these are products the world needs and wants. So he was quite optimistic about it. But what I found really more interesting was that in the past, there weren't a lot of governors that were encouraging mining in the country. And here he had 11 governors up, all singing the same song, which I hadn't seen. And I've had investments in Argentina since 2007. And I've watched these populist governments come in, and with each new president, they made it harder and harder to believe that Argentina was a good place to invest. Today, you have major companies coming in, BHP, the largest mining company, Rio Tinto, the second largest, Glencore, one of the biggest metal trading houses in the world. And it's whether it's lithium, copper, uranium, oil and gas, there's a great deal of excitement that the economy is going to grow and Argentina is going to prosper and supply the world with a new supply. There's also been almost a year ago, the State Department, a little over a year ago, went down there and signed an agreement with Argentina to help develop mineral properties there. And they've subsequently made stronger connections. And Malay's contact with Washington has just grown larger and larger.
Yeah.
I think as the U.S. wants to control a lot of what's happening in the Americas.
Yeah. Well, that's interesting. On the other side of the spectrum, you have the opportunities, right? In this kind of market, and I'm just shifting away a little bit here, where are you seeing the most compelling opportunities, Rob? I mean, is it producers, developers, early stage stories? Where are the most compelling opportunities lying?
I like the explorers and the developers.
Yeah.
We're in a situation where the higher prices are swelling the treasuries of the seniors, and their behavior is very curious. When the markets are soft and prices are down, they seem to go out of their way to get rid of their growth pipeline. They will drop properties, they'll sell high-cost producers, and then they find themselves with a lot of money, and the market's demanding, well, how are you going to grow? And the juniors, I mean, if you look at a chart of the price of gold, and then the GDX, the major producers, and then GDXJ, the J's are almost in negative territory over a period of the last 10 years. And the seniors, measured by the GDX, are still lagging well behind gold, but they're cash rich right now. And the juniors, I like it. I think of the juniors when you're in a gold bull market, they're the Ferraris of the marketplace, because the types of returns you can see there, at least I've experienced, that's where I want to put my money in this type of market.
Yeah. It's interesting you mentioned a little bit about mining equities there of the big guys. What's holding capital back on their part from the sector right now?
Mining has been out of favor for quite a long time in the market. It's been focused on technology and other areas. And if you were to look at a chart, commodities, and the producers are producing commodities, it's at a 55-year low relative to financial assets. And if you look at the total equity markets in the world, total market capitalization, and compare that to the market capitalization of mining stocks, we're looking at 2 or 3% of the total. Whereas if you go back to the 50s and 60s, when you had a growth period, it was 10 and 11%. And so there's a rotation. There was a total, no one wanted to invest in mining. It was bad. And the industry's improved its environmental performance big time. And now there's a sudden dawning going on amongst the minds of investors that, hey, we need these metals. And we can't flip a light switch and increase the supply immediately. The time between the discovery, getting it permitted, constructing it, you're talking 15 to 20 years. And that's on a fast track. So there's a shortage of commodities. There's a definite demand for it. And the types of returns that you could get from, say, 2 or 3% moving up to 10%, that's a triple. But the juniors, I think, there's risks there, but you can get very exciting returns.
Well, Rob McEwen, thanks very much indeed. It's been a pleasure to get your insights.
Thank you very much, Devin.